Hello dear students, I welcome you all to this video lecture on procedure and incidence of GST. In this video, we will go through the format of computation of assessable value and also the computation of tax liability, that is GST payable, which is being asked in some of the cases. So let's first, before we solve such problems, let us once again go through the format. We have done this in our offline classes before the pandemic struck us. Now we will go through it once again so that we can refresh our memory. So format of computation of transaction value. Transaction value is also considered as assessable value. They will also ask you as assessable value. Keep that in mind. So first we have to take the selling price or ex-showroom price or quoted price of the machinery of the item that you are selling, and most importantly it should be excluding GST. If they have mentioned in the problem that the given price includes GST, then it is our responsibility that first we take out the GST portion. For example, let's say they will say selling price is 118 rupees, which includes GST of 18%, that is 18 rupees. So what we will do first, we will take out that 18 rupees out and X GST, that is excluding GST, only 100 rupees will be considered. I hope you have understood this very clearly, you have refreshed your memory. Then there are various amounts or expenses that you incur with regards to sales which are not added usually. So if they are not added, if they are not included, we have to include them. So which are those? Pre-delivery inspection charges, publicity expenses, packing cost, discount in case of advance payment, materials purchased. Please remember, never except for basic customs duty, that is when you import, except in that case. In any other case, you should not take any kind of tax. Even in case of import, only basic customs duty will be taken into account and others will not be. Okay, materials purchased exclusive of GST, add them. Raw materials supplied by buyer directly or indirectly on free of cost or reduced cost for use in connection with the supply, we also to take that amount. Design and development charges, we have to take. Subsidies directly linked to the price other than subsidies provided by central government or state government, that income, that amount has to be taken. Bonus, commission and incentives for increasing sale, you have to take that. Royalties and license fees related to supply include. Advertising expenses, servicing expenses, selling expenses, any expense with regards to the sale of that particular item we have to include. Okay, freight charges incurred by seller up to the recipient's place or place of delivery, very important, we have to take that. Installation and erection expenses, if it is shown in invoice at the time or before supply, this criteria is important. Only if this expense is shown in the invoice while issuing or before delivery of that particular product or particular project, only then you have to take. Insurance charges incurred by supplier, once again seller up to the place of delivery or recipient's place, you have to take that. Transportation charges, please consider. Taxes, duties, cesses, fees and other charges except GST, SGST and IGST, CGST, SGST and IGST, you have to take it. Imported from other country, so this I have already told you, if imports happen, you have to take basic customs duty, but you have to exclude any other type of GST. Only one type of GST will be applicable, IGST. Loading and handling charges, please take that. Warranty expenses, you have to take that amount. When you add all of this to the selling price, you will get a subtotal. So what happens after that? You have to deduct certain items. If it is there, it should not be there in the selling price. If it is there, you have to deduct those items. Which are those? Cash or trade discount. Discount shall be deducted. if it is allowed before or at the time of supply. This criteria is very important. You can claim discount as deduction only if it is allowed either before the time of supply or at the time of supply. You have to deduct. Discount in normal practices, you can deduct that. This is very important. It will keep repeating in many questions. Cost of durable and returnable packing. What happens is, if you send in a container or if you send in a package which you can get back, you will get back that container or that package. You can use that to transport or give or sell other goods also at a later date, isn't it? That's why if the selling price or if the invoice includes the cost of durable and returnable packing, that also should be deducted. When you deduct all of it, you will get transaction value before adding profit margin. So after you get this transaction value before adding profit margin, obviously you will have to add your own profit margin. This transaction value is also cost of supply, okay? That is, until here you have only taken everything which is a cost for you. After that you will add the profit that you desire to have, and then once you add the profit you will get transaction value or assessable value or taxable value of goods or services. So 3 names they might ask you in any name. Once again, transaction value, taxable value of goods or services, one more is assessable value. All the 3 are one and the same, childrens. Please don't differentiate, okay? Once you have got that, once you know the taxable value, very easy, you have to go for computation of output tax liability. What is the tax amount that you have to pay to the government? So first take the transaction value, assessable value or taxable value of goods or services. Then you have to just find out the computation of output tax. CGST, SGST, it might also be IGST, okay? That might also be the case. So when you add that, you will get total tax liability. So I have already mentioned this. Tax liability, while you are computing tax liability, let us go through this very important explanation. For formula for computation of tax liability, this method is generally followed when tax is not charged separately in the invoice. That is, sales invoice shows sale inclusive of tax. In such case, computation of tax is done in following way. That is, tax liability, what you will do, rate of GST into taxable turnover, that is inclusive of GST. For example, I have told you 118 rupees. You will take that 118 rupees and then you will multiply that by rate of GST 18, and then you have to divide 100 plus 18, 118. Once again let me repeat. Taxable turnover, that is selling price which is inclusive of GST or any other amount which is inclusive of GST. Take that amount 118, multiply that by rate of GST 18. Now you have to divide this by 100 plus 18.